Praj Industries, the one stock which has been in focus. And let me welcome on board now Atul Mule, the President, Corporate Strategy, Praj Industries, joining on the show right now. Atul, hi, morning. Welcome to ET Now. And we're clearly seeing this increased push now, Atul, for India's ethanol blending program. We've now given legal recognition to 100% ethanol fuel. Good times for ethanol sector, isn't it? And how is it that you're reading into this move?
I'd say good morning, everybody, and hi, Aisha. It's a very interesting phase, and I would say it's really an inflection point from the ethanol sector. The E85 movement, what we have seen in about a fortnight back, the vehicles, whether it is two-wheelers or four-wheelers, and also E100 vehicles, what we have seen, they're getting ready. So typically in a way that ecosystem is getting ready, and the commitment which has government has given to the various organizations and association over a period of time, they are fulfilling one by one. The petroleum ministry has already committed that there will be E85 petrol pumps will be phased in phases. It will come from 200 to 500 to 5,000 pumps. The ministry more talking about the preparedness from the E85 specifications, E100 specifications, E30 specifications. And at the same time, the automobile industry is also absolutely getting ready. And it's not only the one segment, it is the four-wheeler segment as well as two-wheeler segment. And as everyone knows, the two-wheeler segment actually accounts more gasoline to the extent of 60 to 65%. The readiness of a two-wheeler segment, it's a very welcome move as far as the E85 or E100 ethanol segment is concerned.
Atul, at the end of Q4, you had conveyed to your investors that existing ethanol capacity expansion projects are facing execution delays because of funding issues. Elaborate on this and whether things are resolved.
Yeah, I think it's a very interesting and very apt question for this point of time. For a very simple reason, today the capacity creation is something that was always a talk of town, that we have a surplus capacity to the extent of 300 and 350 crore liters, which is available and which is at this point of time, there are no takers. The moment it has happened from E85 or E100, this capacity will be easily available for the industry to go with that. And important thing is that today the financial institutions or the banks, they were sitting typically from the clearance purposes, will also get eased out because they know the government moves. The direction is toward the ethanol scenario, the direction toward the ecosystem getting built. It's in a very positive mode, and which will give a right message to the institutions, financial institutions, banks, and they are the first one to clear it. And I'm sure they are also evaluating the situation around what's happening around.
Hi, morning, Sajid here. One of the key challenges is the raw material for ethanol. With sugar supplies limited or the sugar output limited, where do you see the supplies coming in? Because if we were to go for an alternate fuel on a large scale, you need to have large raw material for that.
So feedstock is very important as one of the value chain for the ethanol. But as this point of time, we have a surplus available of 300 to 350 liters of ethanol anyway during this year. So this feedstock challenge may not happen in this year of the ethanol year of the financial year. However, the feedstock availability is something, whether it is sugar or corn or rice for that matter, it's been already been considered by the various government association, the government agency, and they are already started working on the developing the feedstock, alternate feedstocks also. Just to tell you that the alternate feedstocks such as sweet sorghum or the intercropping of sweet sorghum coming into the sugar cane, that's one area which there's encouraging results and very, very positive results are coming in. Then Indian Maize Research Institute is working out this different varieties of maize. Indian Research Institute of Rice, they are also working on different variety of maize, which will be high yielding per hectare basis. At the same time, there's a good development happening parallelly from an AI perspective, from a sugarcane side of it. The AI sugarcane is already taken a particular pace and a speed, and then what they really claim, and if they really achieve that from the existing area itself, they will have almost 30 to 35% with increase area available from the sugarcane also. So as of now, as per the Niti Aayog report, what we have seen is that till 2030 or maybe 2031, the availability of feedstock is not a big challenge. However, what you said is correct. The preparedness beyond 2030 from a feedstock side, which already been initiated by the government and various agriculture institute, and it's a very welcome change as of now.
But project execution? Because I recall Atul Q4 faced project execution delays as well, and that weighed heavy on your margins. Those concerns too have abated?
Yes, so project execution, as I said earlier also, now the banks and financial institutions are actually now getting ready, and they have seen what's happening in the ethanol scenario and geopolitical scenario at large, and energy security and government priorities. I'm sure this is the time it will ease out, definitely. And it's the first one to get into that, the project which are getting held or hold because of the financial clearances. But at the same time, we have seen a good moment happening also, the capacity expansion from the existing customer. The existing customers who have really seen that is a good growth, and they also visualize it, what's coming in the next 2 to 5 years time. They are the one who are actually jumping for even for the capacity expansion. It's not only the probably releasing the project, but it's also same time the capacity expansion movement also is going to happen, probably what we can in a quarter also.
Look at this capacity expansion means give us a sense of the kind of expansion that we are expected over the next 3 to 4 years, because for now we are well within production with respect to ethanol, and there's a surplus which is there. But as you have more ethanol based or flexi fuel based vehicles coming on the ground, you will need more of them. So what is the kind of capacity Capex cycle that you see going into next 3-4 years, and how much typically does it take for one expansion to, even if you want to put in 100,000 liter capacity, how much time does it take to add that capacity?
It's a very great question, and it's a question really makes everyone, in fact, I would say, excited. That this question has a multiple layers of answer. Let's take an answer that when India declared the ethanol blending program in 20, somewhere in 2018, 2019, it started the development of capacity, and the capacity requirement was about 1,200 crore liters. And India actually, it took almost like getting about between 4 to 5 years for building this capacity of 1,000 crore liters. That's the one side of it. The second side of it, now today, when we are talking about the flex fuel vehicles coming in, there is also development also having flex fuel kit for existing vehicles. That's also parallel happening. If that scenario is going to come in probably this quarter or next quarter, as I said, the first one, it will be ease out the financial numbers for the funding for the existing project. At the same time, the capacity expansion will come. But for creating this capacity, and what we can see moderately, even if you say we have roughly about 9 crore liters of two-wheelers running on the road. On these 9 crore liters of 9 crore equivalent of the two-wheelers, even if you say moderately that 20% it will shift into the flex with the kits, it required between 300 to 400 crore liters equivalent of ethanol. So the capacity requirement probably by 2030 will again require more than 1,000 or 1,200 crore liters equivalent of ethanol. That's what is the requirement as the plan which the government is really seriously thinking about, getting into the flex fuel kits, getting into the flex fuel as it is to two-wheelers and four-wheelers. The requirement by 2030, we expect based on certain data which we have churned out, between 1,200 crore liters to 1,400 crore liters of additional capacity. Now, having said that, the time required, what we have seen is between 4 years to 5 years. So this is the time, and now probably this time it will be lower. So between 24 months to 36 months is the cycle time for setting up a new project. And I'm sure the moment we grow ahead and in next quarter or so and 2 quarters or so, we will also see a good growth coming into this sector. And similarly, the government will also come forward from the extending the policy which they have already decided, and they already given it for EBP20 program. So the overall the scenario looks very interesting, at the same time very practical as well.
You of that capex that can come in, and that opportunity which brings to you as well, a large part of it.
Yeah, so typically as a capex, as I said, the first movers would be the one who are already having a capacity which is 200 or 300 kV. They will go for expansion there because they have in anticipation that most of them already getting a necessary clearance from the government. But typically what we see this run would see the capacity, average capacity not 100 KLPD, but probably average capacity will go to 150 to 200 KLPD. And the project investment size could be roughly between 170 to 225 crores. That's the project per unit which will happen.
I also want to understand, Atul, if you can give an exact number about what the order book status is as of now, because Q4 was a little bit of a dip as opposed to what we saw in Q3.
Well, I have no data as of now ready with me, but probably in the quarterly call, we have given all this information to the various stakeholders. And we'll again continue to give the quarterly call all these information.
But it would be higher than what you clocked in Q4 because there was that 300 crore rupee of inquiry pipeline, which was also deliberately not conveyed into orders. Can it be accounted for in this quarter now?
Yeah, as I see it, the way the environment is happening and is getting conducive, and the clarity about upcoming policies, clarity about the ecosystem getting built, we are confident that it is going to move into a positive direction.
The other focus area, Atul, for you has been GenX. And, the market is very excited about this. You're in final discussions, as we understand, for modular cooling solutions for international data centers. Tell me, what's the market size for this product you're targeting right now? When will it be launched? What kind of revenue potential, investment, etc., are you penciling in?
So typically when we talked about the GenX, GenX is designed to handle the modular plants, and the whole GenX objective was that the modular plant, especially for the international market, because where the cost of erection is very high. And here we give a modular plant which can minimize the cost, at the same time they minimize the time taken in the foreign terrain. And that's then one of the objective. And as we see that in last couple of days, it is just easing out the geopolitical scenario, and probably we'll have to really watch in this quarter that how the geopolitical scenario is eased out to the extent. And then we see the Europe's or USA for that matter, that's a target potential customer for the GenX. A moment coming from them can be seen in this quarter.
Atul, it was a pleasure talking to you today. Thank you very much for joining us and giving us this perspective on your company and the order flows which are expected. That was Praj talking to us on the expected changes that can happen as a result of ethanol blending and E85 to E100. That's all we have for now in First Trade, and we'll be back after a short break with Mid Capital. Masala.